guys, so in this video I'm going to give you a brief history lesson on how the Forex market came to be what it is today. So we're going to start off this video with a very simple question. What does trading Forex mean? To understand what trading Forex means, you must break down the words trading and Forex. Now, although the concept of Forex or foreign exchange is relatively new, the practice of it is not. Trading or bartering, as it was known, is the oldest method of exchange. The concept of trading or bartering dates all the way back to 6000 BC. So, it is believed to have been introduced by the Mesopotamian tribes. Now, to understand this medium of exchange, goods were exchanged with goods of equal or greater value. And as the system evolved, goods like salt and spices became very popular, and as the demand for that grew, so did its value. So as salt and spices became more and more valuable, ships would sail across the oceans and trade for these goods in what would now be considered as the first ever form of foreign exchange. Over time, as early as the 16th century BC, the first gold coins were introduced, and it began to act as the universal form of currency and medium of exchange. This was because gold possesses the critical characteristics that would represent money or currency, which would be portability, easily carried or moved; durability, which is it's able to withstand or wear pressure or damage; divisibility, which is it's capable of being divided; uniformity, which is the quality or state of being uniform; and acceptability, which is the quality of being tolerated or allowed. Now, although gold coins became accepted as a medium of exchange, it was considered impractical because it was heavy and there was a limited supply. So in the 1800s, countries began adopting what is called the gold standard. And this meant that gold would be represented in the form of paper money or paper currency. And that paper money or paper currency would act as receipts for the amount of golds that it represented. Now, this system was relatively effective up until the First World War broke out. Now, to fund the war, countries under the gold standard would suspend their paper currency being backed by gold in order to fund the war. In other words, in order to print more money, these countries would have to get off the gold standard. Now, at the time, foreign exchange markets were still under the gold standard, and during the early 1900s, countries that continued trading with each other could still convert these currencies or paper currencies or receipts they received. They would still be able to convert it into gold. Now, however, because there was more paper currency or paper money being circulated and printed than there was gold that it represented, the gold standard was not able to withstand the demand during the world wars. So towards the end of World War II, the United States, Great Britain, and France met up at the United Nations Monetary and Financial Conference in Bretton Woods. Now, at the time, the United States was the only country that was not affected by the war, whereas the majority of the major European countries were. So, after the stock market crash of 1929, the dollar was regarded as a failed currency. However, after World War II, the dollar became a benchmark currency by which other international currencies would be compared to. So the whole idea behind the Bretton Woods system was to create a sustainable environment where the global economy could repair itself. Now, to accomplish this, countries that couldn't rebuild themselves on their own would peg their currencies to the dollar, and the dollar would be pegged to gold. Now, the reason for this was because the US held most of the gold reserves in the world. So, foreign countries would use the US dollar as a medium of exchange, or more specifically, as their medium of exchange. And this is how the dollar became the world's reserve currency. So, due to an increase in US government lending and spending, there were more US dollars in circulation than there was gold reserves. This led to the collapse of the Bretton Woods system, when dollars were being sent back to the US in exchange for the gold it represented. So in 1971, President Nixon ended the Bretton Woods system, leading to what we now refer to as fiat currency or Forex. Today, the Forex market is the largest and most liquid of all financial markets, with more than $1 trillion being traded on a daily basis. Understanding the size and magnitude of this market forces one to have a great respect for it. And it is for this reason that trading Forex shouldn't be approached lightly. Having access to a market of this size and nature is an opportunity for people all over the world to improve their financial well-being. However, this can be accomplished if you're willing to put in the time and the effort to develop the trader's mindset. I really do hope that you were able to receive a ton of value from this video and that you understand where it all began. Trading is one of the most rewarding career paths, not because of the amount of money you can make, but because of the person it forces you to become and the mindset you are forced to develop in order to become successful. So to all of you aspiring traders watching this video, keep plugging away, keep moving forward. If you like this video, consider leaving a thumbs up and hitting the subscribe button, so that you're able to get notifications of any new content we upload. For now, I wish you well, and I look forward to chatting to you all soon.